Welcome, everyone, to the Real Estate Investing Show. I'm Clayton Morris. So glad to have you here. Today, we're going to be talking about this surge in home prices, in demand, what's going on in the marketplace right now. This is a real estate investing show. This is not a retail investing show, meaning we're not talking about buying a home for the first time, or where you are going to live. This is how can you navigate this crazy market right now as someone who invests in real estate and uses these properties as cash flowing rental properties. So if you're new to the channel, go ahead and smash that like button and subscribe. We talk about solely on this channel real estate investing and building passive income and financial freedom through real estate investing, as I believe it's the number one way to build wealth in this country. And we're going to look at a couple of really interesting dynamics and different indicators today on today's live stream. So welcome, everyone. Hope everyone can see and hear me okay. Hello, Lindsay. Hello, Freddie. Good to see everybody. Get your real estate related questions in today, and I'll be taking your questions here in just in a few moments. But I want to kind of go through some different pieces of data that I'm seeing right now in this marketplace, and are we in a housing bubble? Big question this morning from the Wall Street Journal. Are we in the middle of a housing bubble? And the answer is no. The answer always is no. When someone asks, are we in a housing bubble? Is this the next housing bubble? No, the answer is no, because there is no such thing as a housing bubble. There is no one housing bubble. There are multiple real estate related markets across the country, right? And they are sometimes related and sometimes not related at all. And just go back to 2008, for instance, and look at that time. And you had major bubble problems, crash problems in Florida and Las Vegas and California and all kinds of different places. But then there were markets that were insulated and did fine. And those are the areas that I want to be an investor in. Those are the areas that I'm most focused on right now as an investor. Those areas that are kind of boring. They got a nice appreciation. They got great school districts. There's Fortune 500 companies continue to move to those areas. They're landlord friendly, but they are not bubble markets. They're not the Las Vegas crazy bubble markets. They are not San Francisco, where all of these, people are priced out of these homes. Big tech companies are suddenly deciding, we're just going to have our employees work from home. So now all of this high-priced office space by like Twitter and Facebook and all of those things in those cities is suddenly affected. And so those are the bubble markets. So are we sitting in a bubble right now? And the answer is probably no, but we are in an overinflated high demand market right now. So let me play this. This is an example of, it's not, and price isn't driving this right now. There's a number of other key factors that are driving this craze for properties and mortgage prices.
Price is not the biggest headwind I'm seeing. To your point right now, we're seeing is bidding wars across the nation, almost in every state. Here's the big thing I don't think people really are thinking about or talking about that much when it comes down to the housing market right now. We always talk about how tight the supply is, but what's the main driver why that supply is so tight? When you look at Generation X and the baby boomers, when they were sort of in their mid-30s, kind of halfway through that cycle, they were in the move-up trade. They were getting out of that first-time home they bought, and they were getting into a house that was bigger. Now the biggest driver in the housing market is the millennial group. They're 27 to 41 years old. Here's the thing. They were renters or they were living at home. So as they go into buying into a marketplace, they're not putting anything back into inventory in the housing market. And I think that's one of the major factors that's exacerbating this unbelievably tight inventory market that we're looking at right now. And hence you're having bidding wars and rising prices.
And that's that's
no one putting their home up for sale because they realize
that's a real key indicator right there. That's an issue. Because right now we don't have the inventory. And so if you want to look at some of the new house data out there, this is another key area where we're seeing some pricing wars happening. Just take a look at this right now, which is this is an example of now how new home sales or new houses are still more expensive than existing homes. New home sales or new homes right now, new houses are still more expensive than existing homes. Despite what the data says. The median price of a newly built house was slightly lower in March than the median price of an existing home sold that month. And that's not even the full story. Demand for existing high-end homes and low supply of cheaper existing homes have driven the median price higher. The median price of a newly built house is being skewed down due to increased but still limited supply of the cheaper homes. The builders right now simply don't want to build the low-cost $100,000, $150,000 homes because the margins just are not there. Like if you're a business person and you're sitting there saying, well, should I spend the time to build a single family house right now that I'm going to sell and make, $30,000, $40,000 profit on after everything is said and done? Or will I put the time, attention, and effort into building a $500,000 to $1 million home? And those are selling like blazing fast, well over asking price, and my profits are way higher. You see, as a builder, it's a no-brainer, right? Where those margins are. You're going to go to where those margins are. But as a real estate investor, what's interesting is that I'm not going to buy $1 million home as a real estate investment. The numbers then are totally out of whack. The internal rate of return is totally out of whack, right? The ROI, the IRR, whatever you want to call it, cash on cash return is nowhere. I'm never going to make back that money as a real estate investor on an overpriced property like that that's really expensive. So for me, it is those lower priced homes, the value-based homes, that I can still get a great internal rate of return on in this market with other people's money. So what we are seeing is millennials buying homes, but they're entering the market for the first time, and therefore they're not vacating another home to put back onto the market. They've been renting, and now they're saying, hey, let's buy a house. Great. So they're gobbling up this property, but they're not like putting an empty home back on the market, trading up, so to speak. So this incredible demand for first-time homes, and builders simply just aren't building them quickly enough, and they can't keep up with this demand. So that's why bidding wars are breaking out all over the country. Homes are selling in minutes, and people are moving away from more populous areas out to further away to try to find deals and bargains right now. And on top of all of that, we have a housing crisis in this country where we just don't have enough homes. And we are millions upon millions of homes shy of getting to the number that we need to be at. And look, President Biden is going to be, rolling out some different things on the infrastructure package for affordable homes. So we'll be watching that very closely to see how that takes shape over the next few weeks. And we expect to have a bill at least mapped out, ironed out, written up by Congress by Memorial Day, so we can start to see what this infrastructure plan will look like. I think it's going to be, it's definitely going to be needed. Now, the question is this first-time homebuyer tax credit or $15,000 first-time homebuyer down payment credit. Imagine that gets added into this if President Biden actually passes that or signs that through executive action. Now all of these first-time home buyers, these millennials that are searching for homes now and can't find them, will then be given another incentive, $15,000 down payment coverage from the federal government. Imagine what that will further do. So, for us, and then add on lumber prices on top of all of that. Skyrocketing lumber prices. Now, fortunately, like at our company at Morris Invest, we locked in lumber prices and cost of materials a while ago. So our prices are set there. Therefore, we're still able to get a really great internal rate of return for our clients. But, if someone's just breaking into the market now wanting to build, or even if you're just a first-time home buyer, like, you know what, we're just going to build our home. Well, expect to pay like 3 times more for materials than you normally would. And good luck finding contractors because they're all being used right now. Good luck getting on a list to find a good contractor, a framer, a roofer, all of those things. They are just busy, busy, busy. There is no end in sight to the amount of time, attention, and effort they are putting into building as many homes as they could. I mean, think about it. Doubling the demand for homes this year from last year. Home prices are up 17% over last year. And this question continues that Brian Sullivan is asking here, and I think it's a good one. Where do we go next from here?
Oh, I could sell and make a bunch of money, but oh, wait a minute. Then I got to buy in the same market or some other hot market and probably just overpay for as much as somebody may have overpaid for my house.
Well, no. So my point there really was they were renters. They don't have anything to put up for sale, right? So they were renting or they were living with their parents. As they now are ready to buy, it's again they're looking to buy, but they're not putting anything up to sell. There's a stat that I track very closely by Altos Research. This week last year, there was 715,000 single residential family homes for sale, not under contract. This time, this week, this year, there's 305,000. Look how much that shrunk, combined with what we know from the home builders who could say, look, we could sell an extra 4 million homes if we could actually get the supply, if we could get the lumber, if we could build them quick enough. All those things are really playing into this incredibly hot real estate market that we have and probably will have for another year and a half.
Yeah, and if interest rates stay where they are, that's going to happen. Now, we got word today from the Federal Reserve. Basically, the Fed's guidance is we're not going to change rates at all. Interest rates are going to stay the same. That is just like carte blanche for home builders who are looking for some guidance. Are they going to ramp up inventory? Are they going to pull back? What are they going to do? Zero movement from the Federal Reserve. That means these interest rates are going to remain or stay near zero for the foreseeable future. And when I say near zero, if you take into account inflation, if you're getting free money from a bank at 2.74% on a 30-year mortgage, 2.74, 2.8% this morning, that's free money that you're able to invest in an asset that's going to outperform and appreciate higher than inflation, the U.S. dollar inflation. I want to give you another data point here about what's going on. I mean, I think having these like macroeconomic discussions right now around this market is incredibly important. And I think if you want to like another indicator in this mix, let's specifically look at gold prices and where gold is sitting right now as it relates to real estate prices and the broader market. You know, if you're a real estate investor, you can't just be looking at one thing with like blinders on. You cannot, because it'll come back to bite you. So when if I'm a real estate investor, I want to know what the U.S. dollar is doing. I want to know what the global shipping situation looks like why it's so important to know what happened in the Suez Canal. I want to know what's happening with gold and precious metals. I want to know what's happening with politics. You need to look at all of these things because it's going to influence real estate investing. And one of those, again, is gold. So take a look at this gold chart here. These are gold prices. Basically, when I put this together, it was like about a few days ago when I grabbed this. So gold today, like we look at gold, I'll go back to this chart in a second, but gold today, like these are current gold prices right now on your screen. So this is gold. Troy ounce for an ounce is $1,778 for a troy ounce of gold right now. Okay, it's going up. It's going up, and so is silver on the right side of your screen. Now, why is this important to real estate investing? Well, I'll come back to the chart here, because this chart represents one of those ultimate moments. If you're studying technical analysis of charts, stocks, real estate prices, all of this technical analysis is turning into a classic cup and handle. That's what this is called, a cup and handle. So you have the bottom part of the cup, see, 1 to 2 to 3 to 4. That's the bottom of the cup. But 5 on your screen is where the handle is starting to form. That means that gold prices are about to shoot up and explode in relationship to what's happening with the U.S. dollar. Because the U.S. dollar is going to continue to have major problems over the next few months, and we could see major declines in the U.S. dollar in short order. So, alternative currencies exploding, real estate prices through the roof, and demand is off the charts. What that tells me is investors are looking for places that has incredible store of value? Where can I store my money that is a hedge against whatever the Federal Reserve is going to do? Whatever kind of, Cold War we are going to get in with China and Russia, where can I put my wealth that I'm going to be okay? And for 4,000 years, real estate and precious metals have been the place where people have found store of value. They've also bought expensive artwork. That's another one, but I don't buy expensive artwork. And so, and to my mind, given where the federal government is going on taxes and fiscal policy, real estate is going to outperform just about anything else as a store of value. Because if the federal government is moving towards capital gains taxes, well, then that's going to hurt anybody who's in the stock market, right? So I'm going to pay a capital gains on every stock that I sell. Gold as well. If I'm selling gold, or if I'm holding it as a store of value, but then also thinking about cryptocurrency. Everyone's buzzing about cryptocurrency, and I certainly own some in my portfolio, but trading crypto, and when you're selling that's a taxable event. It's a taxable event. And if the governments, as we've seen in Turkey and other areas, are now starting to clamp down on cryptocurrencies, what will the United States do? They're going to want their money. I mean, the United States is going to regulate that. They're going to want their money. They're going to want tax money from cryptocurrency. They're going to figure it out. So again, all of those factors on the horizon right now: gold prices, incredible demand, millennials buying properties like crazy, not wanting to rent, wanting to create a store of value. Real estate is going to continue to surge and appreciate. We've been getting, on some of our new construction properties, we've been getting the appraisals. Like, we've finished a duplex, it's already completed, built, done, and we had our numbers ahead of time where we knew the internal rate of return would be and the good return on investment would be. And then we're getting appraisals after the fact because our clients are getting traditional financing, and the appraisals are coming in significantly higher than our price. So even in the construction phase and completion, these prices are going up and values are going up. And that should tell you to me, a strong store of your personal wealth should be in rental real estate. And if you want a team that can do it all for you, that's what we do at Morris Invest. We're a full service rental real estate company, new construction properties, cash flowing with tenants already in the property once the house is finished construction, with traditional financing. So don't spend your own money. Use the bank's money. You can book a call with us just by going to morrisinvest.com. Click on the book a call button there right on the screen. Super simple to do. And we will take great care of you, I promise you. We have the best customer service team in the business, and I would be happy to help you. I'd love to open it up for some Q&A here if I can. Just want to get this screen up here so I can see it better. Let me know your questions on this current market. I wanted to show you the website. That's my goal. So here is our website. Didn't have it as an input put in here, but when you go to our website here, morrisinvest.com, you'll see a little welcome video there, kind of walks you through exactly what we do. And then click on the book a free call button right there, and a calendar will pop up. And you can also grab our Freedom Cheat Sheet as well when you're on our website. So you can grab that. But click on the free book a call button. And for 30 minutes, we'll get on the phone with you at the time of your choosing. All right, let's open it up to some Q&A today. Let's see here in the chat here. Darren Hayworth says, this is a great time to upgrade. The demand is for the 30,000 range. My neighborhood currently is 275 to 400,000, up 20%. The neighborhood I'm looking at is 575 to 750, up 5%. Yeah, luxury homes, those prices, that's where, this is the time. So the numbers I'm looking at, the data, and maybe your neighborhood is obviously a little bit different, but yeah, luxury, not even luxury homes, just the more expensive homes. So the 500 on up to $1.2 million are just selling like crazy. Those values are up. Values are up all across the board. And the demand is absolutely just crushing it right now. Ron says, thanks, I'm interested in real estate. Great, you come to the right place. Let's see. Shay says, we need more non-recourse properties in our company. And we go through ebbs and flows. Where are we on our non-recourse in our next round of properties? Gregory Jacob. Mike Owen says it's a horrible time to buy. Sellers are absolutely bumping selling prices 15 to 20% above expected value, and they're getting them. Yeah, now look, I'm talking if you're buying a home to live in, that's a totally different animal than like what we do as a full service real estate company. Like our prices we have our prices set where they are for a great internal rate of return. So a great net return on cash or on financing. And so we don't bump up our prices. We're not putting we're staying where we need to be in order to make sure that rent is good. The internal rate of return is great. It's a different animal for us. We're not jacking prices up. And then what that does is it keeps all of those other things out of whack. Then the internal rate of return isn't there. Because unless, again, these are mostly luxury homes, but unless you're really raising rents accordingly, it's not going to match. That's why there really is a limit when you're buying rental properties, like what the ceiling looks like. Like if you're buying $1 million home, well, the rent is not going to be $10,000 a month. It's good. It's going to be out of whack. At some point, the rent just does not keep up with the cost of the home. Thank you, Ethan. See, Sarah Draper Wessels says, "Can I buy a home with student loan debt?" Sure, you can. Yeah. Is it Raj? Said, I just had my first introduction call yesterday with your team. Looking forward to working with you. Great, Raj. We're excited to work with you as well. Dana says, I don't quite understand what Morris Invest does. How do you help investors? That's easy. Should I walk you through it? Does anyone else want to hear what we do? I'm happy to show you. So here's our website. And we kind of lay it all out right on our website. You can watch our videos. We explain everything right on our frequently asked questions page. You can read testimonials. So this is our website. We're a full service team. So we find, fix, fill, and manage great properties while you see amazing returns on your investment. Join hundreds of investors we've helped earn thousands of dollars in passive income this month. So what our two teams do, the Morris Invest team and the Sedera Wealth team together, this is what we do. Building brand new homes, placing great tenants with the property management teams that we work with in the property, so they're cash flowing from day one. So, you don't have to do anything. Like if you tried to go and do this yourself, like to find properties and renovate properties yourself, just imagine how long that would take you to do, right? So what we do is we build properties from the ground up and with our property management teams, place a tenant in the property and cash flows from day one. And you can add this to your self-directed IRA portfolio, your own, you don't have to buy it in a self-directed IRA. You can buy it outside it. You can buy it however you like. We work with 60 different lenders. We have non-recourse financing available, and we have multiple programs available. So we have our Freedom Number program. If you're looking to upgrade your properties for a higher rate of return from some other investment properties you have, we have a 1031 exchange program. We have a self-directed IRA program. So we can set up your self-directed IRA in minutes. You can purchase rental property inside of your self-directed IRA tax-free, so that when you retire at 59 and a half, all that rent that went into from that property went into your IRA, and that's tax-free money. We also have our portfolio program. We have a lot of clients who will come in and buy 5, 10 properties at one time. Usually that's for like our higher net worth individuals who have, about 300,000 or more that they want to leverage. And we have our cost segregation program. If you qualify for that as a real estate professional, we have our non-recourse and international program for international investors. And we have our partnership program as well. So let's say you don't have the full money for a down payment, which is usually like $35,000, $40,000. You can partner up with some friends, form an LLC together, and purchase a rental property that you all have equal ownership of. So that's what we do. Anyway, just check it out if you're curious about what we do. But we are full service. So we have the best customer service team in the industry, making sure that your portfolio is performing for you for the rest of your life. That's our goal. Other questions here? Thank you, Mike. Cakes26 says, absolutely. I bought my first home at 23 with home buyers program. My state and my city each had a program I could utilize. Yeah. So Sarah, I hope did I answer your question? I hope I did. Dana, I hope I answered your question for you. Mike Kerwin says about 10 years ago, there was a glut of housing. What happened in a decade? That was bought up. Well, you have to remember a lot of large institutional investors came in and bought them up. We had a glut of housing, and guess who bought it? Wall Street. Warren Buffett famously said about a year ago, I would buy every single family house in the United States if I could. So instead, because all of these single family homes that are existing have been bought up, the bigger issue is that now these Wall Street firms are now building subdivisions because they have to. And guess what? The demand is there for new construction. And so that's what a lot of these large Wall Street companies are doing. They're building whole subdivisions for that. Thank you, Dana. Jim Forio, so $30K is the lowest amount to invest. Jim, I think, yeah, is that because we have different price ranges. I mean, normally our down payment, like the minimum, like sort of down payment on one of our properties is going to be in that $35,000 to $45,000 range. So if you have that to work with, then we have the funding from the banks on the backside. Like we want you to keep as much money as you can. So you'll need that down payment money. If you've got that, book a call with our team. We can walk you through that. Sarah says, I have $300,000 in student loan debt, though. Yeah, here's the thing, though, with debt, right? You can spend the rest of your life paying off debt, student loan debt, and never invest. But my suggestion would be to do both, because typically student loan debt, the interest rates are near zero, are they not? So, continue to pay your student loan debt down, but you got to start building wealth. You've got to start investing. So, and typically with student loans, I think on the credit, if I'm not mistaken, somebody correct me if I'm wrong on this, but I think on credit reports, student loans are not weighted. They are weighted differently than credit card debt. Student loans, I don't think adversely affect. Nicole, can you answer that question? Yeah, so our normal down payment for one of our properties is between $40,000 and $45,000 in the lowest range for down payments right now. Darren, student loan debt is fixed at 6.8%. Man, my student loan debt was like near zero, the percentage. Federal student loans. Cake says, yeah, mine haven't impacted credit too bad. I think, and look, by the way, if federal student loans, as you know, or if you've been watching my channel for any length of time, Nicole says, student loan is not a revolving, so yes, it carries different rates. Weighted. Yeah. So, what President Biden is considering, Elizabeth Warren, Chuck Schumer are pushing for eliminating all student loan debt. And that is gaining a lot of traction. I'm hoping this American Families Plan that President Biden is going to announce tomorrow at a joint session of Congress will include student loan forgiveness, eliminating student loans for federal student loan borrowers. Federal, not private. But there is some move that there might be some private student loans forgiveness as well. But you've got a couple of big pushes from Congress to get this done. Elizabeth Warren, Chuck Schumer want an eradication of student loan debt. And on Wednesday, tomorrow, President Biden is going to announce free public college. as part of his America's Family Plan. This is the next huge stimulus that's going to be announced. And when that happens, they may also couple in the student loan forgiveness piece of this. Because how are you've got to do them together. Free public college and eradicating student loans in this country. And I'm telling you, like, then we can actually get caught up with the rest of the world. Like Europeans cannot wrap their head around how in the world Americans have student loan debt. They just don't understand it. You can go and become a doctor in Europe and not have to pay student loans. You can become a lawyer and not have student loans. Not be saddled with any of this stuff. So you're not 10 years, 15 years before you actually start making a profit in the business. So again, President Biden, hopefully we'll see this big announcement. I'm hoping that they eliminate all student loans. They might just go up to the 50,000 level. I think it needs to be just not an arbitrary number, but with a stroke of a pen, there's $1.7 trillion of student loan debt, federal student loan debt in the United States. Eliminating that would be transformative, and also then making free public college. Any other questions? Any other questions about... Stephen Foster says, I've heard sellers will just raise their prices by $15,000. You think that's true? Oh, I'm sure it is. But the problem is, if the bank doesn't appraise it, then it doesn't matter. But if you have cash buyers, and you have a lot of cash buyers who are upending the apple cart, they're coming in and buying properties regardless of what the bank would say, because they've got the cash and they're just planting this money. Also, remember, real estate is a store of value. It's like gold. By putting your money into real estate, it's a hedge against the inflation that is coming. We are about to see a hyperinflation period in the United States. So if your money is sitting there in a bank, you are losing money every day. Remember that. Money sitting in a savings account loses value every day. The value of that dollar goes down every day you keep it in the form of U.S. currency. Remember, the cost of a Happy Meal in the 1980s is way less than it is now. Has the Happy Meal changed? No, in fact, they are giving you fewer fries now. But the cost has risen. That's inflation. Ronald Smith says, will the president announce anything regarding homeowners? Yes. I'm thinking tomorrow night we're likely to hear, well, first of all, looking for mortgage forbearance extension. I'm not quite sure if there's going to be federal housing assistance for first-time home buyers. That's a big piece of this and what that will look like. So there's going to be some housing announcements tomorrow during President Biden's joint session of Congress appearance tomorrow night. Gerard Bostler, what are your favorite data sites to help keep you on the pulse of markets you invest in? U.S. Census data is important. Crime. There's an FBI and crime website that I use. There's the Fred indicator. Let me see if I can pull this up here on the screen. This is the St. Louis Fed. This is a good one. I get a lot of good information from the fred.stlouisfed.org. So you can study signs and graphs there. Let me pull it up here. I think I have a few of them. Pull up here. Do I have it? No, I don't. Just to give you an indicator of like what's happening in different marketplaces, you can see, valuations of things. I mean, look, right now you have a lot of companies that are overvalued. So you can look at, here's the Fred. This is Fred. So you can see like these are like, this is a non-financial corporate business debt. These are companies in the United States right now and the amount of corporate debt they have. Okay, all of these companies are just borrowing money from the federal government, printing it like they're crazy, and they're just taking this free government money, and they have massive debt liabilities. And look at the spikes there in 2020 and 2021. And then here's the amount of public debt versus GDP. Look at the amount of public debt at the end of the indicator down here, just skyrocketing. So this Fred indicator, really good website for that. And then frankly, we write a lot about that at Morris Invest. Like if you come to our website, we have a whole blog. If you go to morrisinvest.com, we have a whole blog that we cover these data points and things that are happening in the market right now. Certainly it's tax time, so we have our rental income tax guide for real estate investors. What's happening there? We try to keep up on different equity strategies, best investing strategies, real estate versus stocks. We've got different market data that we're constantly focusing on, like in Texas. So you can go to our website as well. We put a lot of work into our website to help people learn about the market conditions right now as well. Hope that's helpful. See any other questions today? Inadvertently logged off of the questions page. Any other questions, everyone? Be sure to check out the other videos that we have here on the channel. We've got a lot of great content here to help you get started with real estate investing, answering questions about cost segregation, taxes, and different markets across the United States, what we look for in different rental markets that you should absolutely be considering if you're going to invest in real estate, crime, best school districts, etc. All of those things go into our decision where we're going to start building properties. So thank you, folks, for watching. If you'd like to book a call with our team, you can go over to morrisinvest.com, click on the Book a Call tab. And thank you for joining us on this Tuesday live. We'll be back here next Tuesday with another live stream studying what's going on in the real estate world, hoping to make you a more intelligent real estate investor. The data and the numbers don't lie, folks. So when you see these pieces of, when you see this data happening right now, you see gold sitting here, you see corporate debt over leveraged, you see the amount of money, the public debt as it compared to gross domestic product. Like, these numbers don't lie. You see the stock market way overvalued, up 184% overvaluations in the stock market. Like, stuff's about to happen. And where I want to preserve my wealth is in real estate, making sure that long-term preservation of wealth is happening inside. To me, the best way to build wealth is through real estate investing. So much love to all of you. Thank you guys so much for joining us today, and we'll see you back here next week, everyone.